is Chris from Serene Education with the 4 major notes update for the 14th of June 2013. Okay, 4 majors this morning, Friday, end of week. Looking at the indicator table here on each pair for the 4 majors, starting with Euro against US dollar on a daily. Straight away, what do we see? Upside, favorites still. RMO very well above the zero. MACD consolidative at the moment now, as we've now punched through the 23.6 and price is now finding support above it. It's imperative that price actually maintains above this area now, so that if we get a close above this area, the 23.6 today, then there's the more likelihood for price to continue to the upside towards that 50% monthly fib retracement area above us, which is from the 23 to the 50. We're still looking at that 160 odd pips range. You can see the intraday sentiment is negative, and we can see the consolidating on the Asian session. However, the long-term sentiment is still very much positive. So seeing an indecision candle here, if we use the 23.6 as our support intraday, that would indicate where price needs to stay above, or above today in particular. If it did close below this level anytime sometime today, then obviously we should be looking to the downside, and the consolidative area to the downside would be the prior consolidation high here, which from the 23 to the downside is approximately 70 odd pips. However, because we're in an uptrend and we are trading above 23.6, it's imperative that we look for buying opportunities, and that needs to be our focus. Okay, so if you go to a 4-hour chart, we want to see the 23.6 acting as support. You can see the 20 period moving average on our 4-hour time frame acting as a very nice support for price as she's moved higher. Just near term, you can see she's quite clearly finding some resistance now, as she's still above the 23.6, which is important, because as long as she maintains above it, there's always going to be the favor to the upside. She has to use that 20 period moving average now as the support. So if I just move horizontal up there, you're looking at 133,157 mark, which happened to be the prior consolidation high. Support just recently, we had a nice little morning star formation here, but there was no sentiment up, as we quite clearly see here. So imperative that we see the 23.6 acting as support through this morning. If we don't see it acting as support through the European session, then there's more likely for resistance to be a real game changer here. You can see that as price has been moving up on the 4-hour, the MACD is seriously fallen, or the highs have got lower, and you can see subsequently we're trading below the zero line. RMO is not making any higher highs on the 4-hour time frame, and that's what you want to see. If price is to be positive, you want to see the RMO, especially on the 4-hour, showing or indicating upside favorism. At the moment now, it's consolidative and therefore making lower swings. So as it stands at the moment now, no trades up. It would have to break the current high, which is above here somewhere at 13361 to me, making higher highs. If that's the case, then we should be targeting the 50% region at the top. Failure to do so, I would see it consolidating end of week. Look at the news to see if there's anything out there that's going to really factor in price today. We have this morning at 10 a.m. GMT, we have the CPI year-on-year figures, very, very important, and nothing else other than a lot of US data this afternoon. So the PPI month-on-month figures for the US at 1:30 GMT. We have core PPI at the same time, current account figures same time, and then from 2 o'clock right through to 2:45, we have the industrial production month-on-month figures, the consumer sentiment, TC long-term purchases. So a lot of data for the US market this afternoon. Could that reflect on price? I think if price can stay, the euro, if she can, and I'm speculating now, but I think if we can spend more time, or spend this morning above the 23.6, then it's a good sign for euro to rally this afternoon. If we don't see it and we see it closing lower, then there's more likely for the US dollar to favor this morning, this afternoon, and then we should be seeing further downside. So be aware of that and be patient. Sterling against US dollar. Let's have a look at this particular pair. Let's move it on. There we go. Daily range. Trading above a major support and resistance level here, which also was the 50% fib retracement on the monthly. Clearly moving to the upside, tentatively towards that 61.8 now. The sentiment intraday bias, very indecisive. I mean, the long-term moving averages are all below price on our time frames, and the RMO is complementing it on our daily 4-hour and hourly and 30 minutes, but nothing else. Very hesitant intraday. You can see a lot of blue and red, and primarily if you look at the actual daily trading range and the candle range for last night on the Asian session, very flat indeed. Not much movement at all, and that reflects on the actual the indicator box over here quite clearly. However, RMO is still above the 0, which is important because it's telling you we're in a trend, in this case up. MACD is very much in the above the 0. However, you can see as we moved higher, the consolidation we are seeing consolidation to the downs, less sentiment and it's consolidative as we move higher. Very tentative candles. For our chart, let's just move that over. You can quite clearly see price hasn't really moved anywhere. A lot of spinning tops, which is not good for trading. RMO is flat on our 4-hour time frame, not making higher highs, which tells you that the sentiment is now starting to move from one of being very positive recently to one of potential consolidation, which is as we head into this, and then there's more likely for price to revert to the downside now. So imperative, if we want to see any further movement to the upside, we would need to see an hourly close, a bullish engulfing candle close on the hourly. Let's have a look at that chart right now. You can see, but it would need to close above the current high to be of any use to us. And once we get that, how much it eats into the actual profit range is dependent, but it's only another 43 pips and change to that level, the 61.8. So we want to see a bullish engulfing close above this high here. If you don't, you're going to start seeing RMO making lower lows, which indicates that we're starting to see slowdown. It makes sense because we're trading into Friday, but fundamentals this afternoon might very well reflect in price action as well, because there's quite a lot of data for the US market. Okay, so US dollar Swiss franc. Let's have a look at this particular chart. There we go. Still falling. Price has been consolidated because we are now trading below a major support and resistance level in the shape of the 23.6 monthly Fib retracement area here, and consolidated because of that. And we started seeing consolidation prior to this, but you can see a hammer yesterday, and price on the Asian session very indecisive, spinning top, but consolidative, not making lower lows. You can see the candle yesterday very much, well, trading lower, don't get me wrong, however then pulling back during the course of the day and then closing higher, so almost pulling a potential hammer here, but that won't be a true hammer indication unless we actually see a bullish engulfing candle. But then we've seen the breakout. Are we going to see a pullback today where the US dollar is going to gain a bit of strength against the Swiss franc? But as long as it stays or maintains below 23.6, then we should be looking for shorting opportunities. So look at the sentiment of here. The long-term moving averages are still above price acting resistance. RMO is complementing that, but you can see the R squared very non-directive. Okay, and the chart is very speckled. So for me personally, no real trades here. I know it's still negative, but there's no genuine sentiment telling me I should be looking for genuine shorting opportunities in today, because my R squared is, for one, is all red, so there's no true sentiment, and there's no blue or red in today, so it doesn't really confirm that. There is a slightly more blue, but I could see that quite clearly we are consolidated, and I know for sure that if price maintains below 23.6, then the ultimate outlook for this particular pair is still one of negativity. It's making swing lows, which depicts downside. It's been quite an aggressive sell-off on the daily. We go to our 4-hour time frame. There we go, swing low, swing low. You can quite clearly see where price is trading now. Very indecisive. The last 20 odd hours, price has just been moving sideways. RMO has dropped, but the candle that's in play right now, we are seeing a slight consolidation, almost the same, and the MACD is pretty much blue, so green and bright, so we know there is consolidation. So we would need to see a defined close below yesterday's low at 91.70, and to give us further. But you can see here again, on the 4-hour, you can see the 20 period moving average acting as a very strong resistance for this one over here. Resistance, 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 resistance. Could we see the same over here? Very important. We've got to see resistance for this to be positive. Negative sentiment, we do need to see a bearish engulfing candle close lower. Moving on to the US dollar Japanese yen. Here again on the daily, you can see quite a lot of sell-off recently. Price breaking about the 50% Fib retracement area, moving higher, however, being stopped by this resistance high here, bearish engulfing candle, and price fell, because any breakout, you're likely to see a pullback. And sure enough, we had the breakout, the pullback, but we want to see support here on this upside trend. That failed to materialize as we had this bearish engulfing candle. So that we knew straight away the sentiment long term for the US dollar against the yen was still one of consolidative to the downside. So if it broke 50% Fib monthlies, it was going to rally towards the 38.2, and that's exactly what she's done now. Yesterday in particular, selling into that area and then pulling back. A lot of profit being taken because people would have been aware if they had sold here, that would have been their long-term target. And sure enough, a lot more contracts yesterday were closed. However, you can see on the Asian session, we've seen a lot more selling on the Asian session last night. So the overall bias on this is still looking negative, but we are trading quite close to this 38.2. You're putting a lot more risk on the table. You can see the 38.2 here on our monthly, which is red line, and 38.2 February weekly retracement levels are very much together here. So this constitutes to a very strong, you can see a lot of consolidation here in the past. So this constitutes to a very strong support. And if you're going to see those type of areas, you're more likely to see more consolidation. So selling into it, but just be aware we could see contraction or consolidation as we head into this area here. It's vital that we get to see a break below this area as soon as possible, because then it will constitute that we're still looking for further shorting opportunities. But you'll notice that the institution moving average is on her way below price. So on the daily here, the institution moving average, and our weekly, we still have the institution below price. However, on every other time frame, on an intraday time frames, you can see that the institution moving average is above price, acting as resistance. Quite clearly, we've seen a lot of selling off because of that. So long-term sentiment is still positive, intraday sentiment still looking negative. However, the selling that we're seeing intraday is non-directive because the R-squared is not fully blue. Okay, so that's important. So consolidation. Look at the 4-hour time frame. There we go. Okay, so there's my 38.2. You can see price consolidating here recently. Consolidation, breakout, the pullback and the continuation low. Here we had another one, breakout, the pullback and the bearish engulfing candle. So as it stands at the moment now, if you are looking for any trades, it might be something intraday to the downside, but because the R squared on our smaller time frames are 5, 15, 30 minute, there's 63 pips to this level, guys, but the R squared isn't complementing price at the moment now, so you got to be very, very tentative. Okay, you're putting a lot more risk on your trade because you don't have true sentiment or selling sentiment on those smaller time frames. On the hourly, just want to give you an indication of that. Bearish engulfing candle over the past hour or so, making swing lows, which is what you want to see in a negative trend. The last arrow was blue. There is no red arrow here. And candlesticks are still very much red, which is a good indication, but we don't have a red arrow. And the R squared is not complementing that selling. Okay, and the MACD needs to drop below this line. The RMO needs to make a low histogram. Excuse me, guys. And then we need to see the all-important red arrow. But by the time you get your confirmation signal, you very much eaten into most of your profit. So is it worth it? Not really, because you've been carrying a lot more risk and you're not getting enough profit for that risk. So it's far better to wait for a genuine close below 38.2 and then take the trade from there onwards. That could be reflective in this afternoon's trading, because this is the US dollar Japanese yen. So to this afternoon's trading might give us that bearish engulfing candle, or it might give us a bullish engulfing candle. There again, we don't want to speculate. We want to see what the market comes out with, and then we'll trade that outcome. So might not be a trade today on US dollar Japanese yen because of that. But if you're patient enough, you might be rewarded this afternoon. Okay, guys, that is it. Short and sweet today. End of week. More likely to see a lot of consolidation this afternoon because of the fact, or we could see the total outcome. We could see some really, really negative figures coming out of the US market, or positive, and we could see some movement late this afternoon. But otherwise, consolidated nonetheless as we go into a Friday. Be aware of it. Back it up with some money management rules if you're using this particular template. Follow the rules of this particular template to start with, and then back it up with sound money management rules. Very, very important. You've got to have some very strong money management rules these days, because there's so much more speculation in the market than we're seeing these years than we had previous to 2008. Other than that, keep it simple. Okay. Always look at the major support and resistance lines. Look at your shorter term time frame resistance support lines, and then trade accordingly. We don't want to speculate. We want to try and get as much probability in our favor, and then we'll trade. Other than that, have a fantastic weekend with family and friends, and I'll see you nice and early on Monday morning. Until then, you guys trade serenely.